person, a professional, thorough professional CA Jatin Christopher, who will unfold to us as to how GST, statutory audit and tax audit are knitted.
I now request Chairman of Kalburgi branch of SIRC of ICAI, CA Amog S. Dharwadkar, to introduce the distinguished speaker and greet him with a bouquet. Ladies and gentlemen, applause please.
A huge round of applause for Jatin sir, who have been with us in most of the state level conferences guiding us on GST. I request Chairman from Kalburgi branch, CA Amog S. Dharwadkar, to introduce the distinguished speaker to the august gathering.
A very good morning to each one of you. Before I go to introduce the speaker of this technical session, I want to congratulate the chairman of Bangalore branch, CAT Srinivas, who has done an excellent program of this 18th state level conference. It was really a very wonderful experience. Moreover, this has been a flagship event for all the branches of Karnataka. The first time all the branches have come together on a common platform to make this event a big success. We are almost through the halfway. It has been an excellent day yesterday. Hope so it is today also. We know GST is the most wanted and the most haunted topic of today. It's the need of the day, need of the hour. And for that, we have a speaker who is really soft-spoken and has a terrific command of the subject. We will have a good session for this, like the one we had yesterday of Girish Ahuja sir. Now I introduce CA Jatin Christopher, who is also a cost accountant and a law graduate. He has qualified in 1996 and he specializes in indirect taxes. He is a resource person for the institute in its various post-qualification programs on indirect taxation and extends support to ICAI in publication of educational and research material by ICAI on various indirect tax topics. He is also a resource person for the government in conducting training for practitioners, trade and officers. He has been in practice since 2000 as a partner in JCSS, a full service firm with presence across India. With these few words, I present before you the speaker of today's technical session, CA Jatin Christopher. Thank you.
Eldrigu namaskara. When we speak about audit, we need to recognize that quite like service of a teacher, like the service of a doctor, the compensation and the contribution have no comparison. A teacher has contributed to the lives of students that cannot be measured and adequately compensated. A surgeon saved the life of a patient, and there's no value that can be ascribed to that surgeon's diligence, presence of mind and impact in that patient's life, and he will definitely not be compensated by any standard of adequacy. Quite like that, an auditor's burden cannot be measured. When every conference there are some reference is made to GST about how significant this tax reform is, how important GST is to the nation. Somewhere we are failing to recognize the contribution of auditors in their own area of specialization touching GST. I'm very grateful to Chairman of Bangalore branch for offering me to come and address members on this topic of audit and GST's bearing on audit, whether it's statutory audit or tax audit or management audit. The reason is certain issues relating to GST needs to be brought to members' attention with great urgency. And this conference was another occasion for me to go back and read accounting standards, Ind AS, of course tax, the new 3CD, some instructions relating to this, some practices in trade. The reason is GST has brought to tax transactions that were never taxable in the past. So when we look at, in trainings that tax officers attend, one of the key points of emphasis for them to consider is that don't be limited by what is in the financials, because you may not find everything that you need to tax in the financials. So I'll make some initial remarks to bring to attention these areas in GST. Money measurement is a very significant concept. It's so fundamental that we don't start learning accounting without first covering the concepts and conventions. If a transaction is not denominated in financial terms, it does not qualify to find a mention in the financials. But GST is unmoved by this concept. Transactions where the consideration is not in monetary form are also liable to tax. There's a reference in Caro whether there are transactions that are entered into for consideration in non-monetary form between associated enterprises, related parties, a comment is to be made. It's important to know that users of financial statements may not understand the significance of the comments being made by auditors. But whenever they wake up and realize the significance, they go back to the Caro and find out that auditors have already addressed these issues in their audit report. So therefore, auditors are called upon to make their contribution long before anyone realizes the value of it. One, the role of auditors is not possible to be adequately compensated. Two, the contribution by auditors will be far ahead in time before users of those statements are able to derive its benefit. If transactions are not in monetary form, it will obviously not find mention in the financials, yet those transactions need to have been taxed and reported in GST returns. There's going to be a big gap between the way a transaction is treated in the financials versus the way a transaction needs to be treated in GST records. The next aspect is, I'm sure everyone has received notices relating to service tax, and now that same proclivity extends to GST also. Income appearing in 26 AS is not matching with service tax returns. Everyone's got notices. I've even got a notice that says income in 26 AS does not match with the service tax returns to the extent of rupees, and it says to be decided later. They're in such a tearing hurry to issue the notice that they want to get the notice out of the door first, we'll sit and figure out the amount of tax later. I just need to get the notice issued. So there are some very enthusiastic young people in office. So I told them, look, this is one notice. I don't want you to file a reply. Because these young people are so enthusiastic, they're so mindful of due dates, etc. Even in spite of my own instructions, they will file returns, they will file replies, they will go attend hearing, and they will come back and say, look, this officer has confirmed the demand audit. So this one thing I've told them that, look, please allow me. No, sir, but this is a simple issue. I said, what is the amount involved? He said he's going to discuss later. That is what I want to go and discuss. So therefore, we'll need to bear in mind that regulator is even further behind as far as understanding and interpreting these financial statements. So if we accept that we are so far ahead of the times that our contribution as auditors is going to be recognized many years later, the burden is enormous to understand the treatment that ought to be extended in the financials. When you look at transactions in the financial statements, GST disaggregates every legal entity into distinct persons based on the number of registrations they have secured. If a company has operations in 5 states and they have 5 different GST registration numbers, GST treats each registered person as an independent entity, dehors the rest of the entity. So therefore, there is the need for explaining how transactions inter-branch will eventually be dealt with in the financials of the entity. When we understand this concept of distinct persons in GST, we'll find that there are certain fictions in the law. Law creates a fiction. The first fiction is that every branch is distinct from the rest of the legal entity. It's very complex for a tax officer to wrap their mind around this transaction, because if it is to deal with stock transfer of goods, they're able to visualize how this works. But if you explain that there is an equivalent of stock transfer of services, they are not able to understand. And who else other than the auditor is best placed to identify the existence of these transactions and make suitable disclosure? We'll come to clause 44 towards the end, because I'm sure that's what is one of the key pain points. But to be able to get to clause 44, we will need to recognize certain inevitable realities of GST. If we go back and look at legal fiction, we need to admit that legal fiction is not a special form of treatment that the law is prescribing. Legal fiction is alteration of the facts, but the treatment is the same. There is no special treatment that the law requires to be extended. The law simply says the facts will be altered from this to that. Every branch is treated as a distinct entity. Therefore, when you have transactions inter-branch, it has to be exposed to tax. The best place to look for these transactions is to see what is the reliability of the statements made before a GST officer by each distinct person. There is an enormous distrust between the taxpayer and the tax collector. There is a presumption that some mischief is going on, and if you see, notices are issued under the section that deals with demands in case of suppression or fraud. That section is invoked more often than sections where inadvertent errors are being identified. Now, to deal with this distrust, there's a need to go to some neutral third party whose opinion neither will contest. Who is this neutral third party? That is the auditor. So I would urge auditors to consider that financials is one part of the audit exercise, but enormous emphasis needs to be paid to disclosure. I would request auditors to take this upon themselves. Disclosure, 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 disclosure. Please ask yourself if you have filled your report with adequate disclosure about every aspect that you have come across. Very often, there is an understanding that there's an expectation that users of financial statements ought to have a certain level of understanding of the transactions before we start reading those financials. But I'm very sorry to say, users of financial statements don't have that minimum level of understanding. So please don't hold back. Please be liberal as far as your disclosures are concerned. Disclosures start from nature of business. Disclosures start from nature of business. If you ask any internet-based enterprise to describe their business, they will describe it based on their areas of expertise. But from an accounting or a taxation point of view, what is important is not the areas of importance or areas of expertise, but the principal source of revenue. There was one client many years ago. They were in the business of taxi aggregation. They were aggregators for taxi services. So, Service Tax Department conducted an audit and they asked this auditee to give a note containing the background of their business. So, this director, one of the founder directors who had the time to sit and attend to this, he got very excited because here is someone asking him to explain what is his business all about. So, he prepared a 20-slide deck explaining his business. It talked about software architecture. First of all, it started with how he studied in IIT and how he left India many years ago and went to a foreign country to study business management, and then he worked in a bank. He left that bank and joined an investment private equity company, and then he took a one-year holiday. He did many things. So, it's some background to how he came about with this idea. Then it talks about the software architecture. Where is the server? Where is the tool in the hands of the customer? There's a tool in the hands of the taxi operator, and how a call is connected. So this service tax officer was already very winded, very exhausted. He said, look, I'm asking you something, you're telling me something else. He says, no, please bear with me. I have 19 more slides to go through. I have to explain to you what I have done so far. The reason why I have raised so much of funding, because the investors are so confident that I'm going to go places, and so he went on and on describing it. Finally, he sent this deck to the department, and there's some chartered accountant who was involved, who was helping them get this audit completed. He also added one small paragraph at the end of this submission to the department and said, sir, basically this company is a commission agent. They take 50 rupees from every driver. All right. Once the audit was finalized, the report was issued to the client, and the client was very upset with the way department had interpreted this 20-slide deck. How can you say that I'm a commission agent? You know, I am studied in IIT. Then, you know, I went to some university, very prestigious university. I did MBA, and then I did. Taxpayer is right in what he is saying, but what he is saying is irrelevant for tax. All right. Taxpayer describes his business based on his expertise. Tax is interested in principal source of revenue. What is your revenue? 50 rupees from every driver. Thank you very much. That's all is your business. And it is not to be dismissive about the contribution these businesses are doing in the nation today. I don't have a very good grasp of what is their contribution, but I'm told it is a very significant contribution they are making. So, and if when many people say that that is a very significant contribution, people who don't understand join in agreement. So, when you look at it from this point of view, Let's look at the financials. Very often we hear this discussion come up. What is the business that you're doing? So the taxpayer starts to explain to the tax professional what is his business. What is important is for us to collect information from the taxpayer. The tax professional needs to distill that information and extract facts relevant for tax from that information. We cannot expect the taxpayer to provide us the facts. This is where we end up going wrong. And I keep saying this every time. Please take the financial statements. Ask the auditor. Let the auditor teach us what he believes this company is in the business of doing. There's a company whose name is ABC Developers Private Limited. ABC Real Estate Developers Private Limited. So everyone proceeded on the premise that this company must be a real estate developer. So the first question was, how did you come to know that he is a real estate developer? It's in the name. It's in the name. The name says ABC Real Estate Developers Private Limited, so they obviously must be in the real estate development business. Then we know now that nothing could be farther from the truth than what is in the name of that company. The name, we all know how the name got allotted. 5 names were given. The one that you least expected was allotted, and you were too exhausted to go back and fight for the name that you wanted. Isn't it? So therefore, it's the auditor who describes best the nature of business during the year. Let me bring this aspect for your consideration. When we describe the nature of business, we also have to identify what is a business. What is a business? There's a lot of jurisprudence that is developed in income tax to establish what is business. You know, whether it's it started from the discussion relating to revenue expenditure incurred during construction period. Is it admissible as carry forward of loss? And there's a lot of decisions going back to 1952 in Western India vegetable products onwards. Tuticorin Alkali, Saurashtra Chemicals, all of those judgments, number of judgments, Karnataka High Court judgments as well, dealing with in section 3, section 28, section 37, talking of income tax law, talking about unless there is a previous year, there cannot be any loss in that previous year. And a previous year can exist only if there is a business. Business is a business only when it has achieved income generating capacity. Every outlay, money expended does not become business. Entity incorporated does not become business. Section 16(1) of GST law also refers to business not as the outlay of the entity, but supplies which are used or intended to be used in the course or furtherance of business. So therefore, please ask the auditor, who better than the auditor to tell us if the business has come into existence or not. Because auditor has had the first pass, the opportunity to look at the nature of activities of the entity, the expenses incurred, resolutions passed by the directors, whether all this expenditure has really fructified in bringing into existence a business, or these are all adventures of an enthusiastic board with a lot of investors' money. So we look to the auditor to make this disclosure, not just describe the business, but also establish what is the date when the business came into existence. The reason why auditor's opinion matters is because no one contests auditor's opinion. It's stated in the financials is what is used by revenue while litigating tax demands. The revenue states that in the taxpayer's own financials, it has been stated as so and so. So therefore, tax regulators also read taxpayers' financials. Many years ago, there was one instance where a tax officer was trying to explain to a taxpayer's accountant, saying that I want to know details of your foreign currency expenditure. So this tax officer is explaining, and this accountant was not able to fully understand. they seem to be struggling. So I was passing by, so I stopped at that officer's desk and said, sir, you seem to be having some difficulty explaining the requirement to this assessee. May I please help you? He said, yes, please come. I needed someone to help me. Please tell him I'm looking for foreign currency expenditure to check RCM payments. I said, sir, don't worry. You please ask him to bring the balance sheet. You please ask him to bring the balance sheet. All the information you need will be there. So he asked me, are you sure all the information that I'm looking for will be there in the balance sheet? I said, yes, sir, it will be there. You can be confident, trust the auditor. Everything is there. What you need, what you don't need, what you did not know you needed, everything is there. All right? So this officer very gladly told him, look, Monday you need to bring the balance sheet. I happened to go to the tax office again later that week. Wednesday or Thursday I was in the tax office. When the officer saw me, I greeted him. He did not reciprocate. So I thought there was something amiss. I finished my work. On my way back, I stopped. I said, sir, how are you doing? Did you get the information you were looking for? I said, absolutely not. I didn't get any information from this taxpayer. So I asked him, sir, why didn't you get any information? Did you get the balance sheet? I got the balance sheet, but there was nothing in it. Now that got me excited. I have learned how to prepare a balance sheet with all the information that is required at that time in Schedule 6, now 3, CARO, all of those things. I got excited because now I wanted to know how do you prepare a balance sheet that does not have information. So I said, let me look at the balance sheet and see what is this balance sheet this man has given that does not have any information. So he pulled out the file, he took out the balance sheet, he gave it to me. You know what the taxpayer had done? You asked for a balance sheet, he's given the balance sheet page. He's only given the balance sheet, there's no profit loss account, no cash flow statement, no schedules, no notes to accounts, auditor's report, director's report, nothing. You ask a stupid question, you will get exactly a stupid answer. The reason why this taxpayer obviously was so anxious to give the full financials is because all the information is already there. And a diligent auditor does not hold back any information, and we need to continue that trend. Today, if you see when the department sends requests for financials, they say, please submit financial statements comprising of balance sheet, profit loss account, cash flow statement, schedules, notes to accounts, auditor's report, director's report. They give this even to a partnership firm. You don't know whether they started giving this to partnership firms also. When in doubt, ask for more information. So they have gone overboard. They also ask for information. Please give tax audit report. Please give ITR 5. But is ITR 5? I don't know about all of those things. I want you to know that I know that much. So whatever is appropriate, you now think about it and you please provide me all the information. Don't just give me one page balance sheet and say you have met my requirements. The implicit faith in auditors is testimony in these notices that is how the world at large believes auditors. If you look at transactions where the incidence of tax escapes. Now, as you know, GST is applicable when there is a supply. In the past, we used words like sale for goods, service. These expressions were very common in the past, but today we use a new expression called supply that expands the scope of what is to be taxed, what is not to be taxed. One thing is true, there are many transactions that don't fit within the definition of supply. Many transactions don't fit within the definition of supply, even if it amounts to a transfer or results in any income. The reason why I bring this up is a gathering of auditors are in the best position to understand this, because reporting something as income to the tax officer, it implies it is part of turnover. But we know better that everything that appears as income does not is not derived from a supply transaction. For example, creditors written back, provision no longer considered necessary, or if you have discounts of earlier years received after the books are closed, that those discounts cannot now be reduced from the carried value of inventory, and many such transactions will need to be treated in the P&L account and reported as income, and everything that is income cannot ipso facto mean there is a supply. So therefore, there is a dependency on auditors to more accurately classify revenue in the financials. And if compulsions of Schedule 3 limit the expressions that can be used to describe income, disclosure, 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 disclosure. Make adequate disclosures to express, for example, while dealing with recognition of revenue, it can be described what these lines appearing as other income or operating income relate to, whether they arise out of supply transactions. I'll give you a small example. There is a accident, a vehicle has been totally damaged. When the insurer settles the compensation, the wreck belongs to the insurer. The wreck no longer belongs to the insured. In law, there is this thing called right of subrogation. The insurer now takes over the wreck, and the insurer is entitled to sell the wreck and defray his cost of servicing this policy. There is going to be income received by the insured as compensation. There is going to be income appearing in the insurer's financials as income from sale of wreck. Neither of these fit the definition of supply. But what happens is, everything is income from operations. Everything is income from operations. So therefore, there is an enormous dependency on auditors to help us make sense of what is this income, how much of this income does not tie up with what is supply as far as GST is concerned. One may ask a question, it is not my role to go into GST matters, CARO, Schedule 3, tax audit, ICDS. I limit my area of activity, area of inquiry to only these areas. It is true that the terms of reference is limited, but it's also necessary that within the scope of those terms to make disclosure as to what do you mean when you disclose something to be an income. Does it arise out of a bilateral transaction or a unilateral transaction? I'll give a small example to highlight this aspect. The reason why we need to talk about unilateral and bilateral becomes more important as you go into clause 44 of tax audit to disclose what are expenditure. When two parties sit together and enter into an arrangement, and the outcome of that arrangement is dealt with in their respective financials, we are referring to those as bilateral transactions. When you sell, when you purchase, when you write off creditors, when you write off receivables, is it a bilateral transaction or a unilateral transaction? We cannot give one answer, because sometimes you sit down with creditors, settle their account, and then write back any amount that is agreed by them as no longer payable. This could be a bilateral transaction. But it could be another situation where a taxpayer decides that he is not going to pay his suppliers anymore. He just decides he is not going to pay them, and those suppliers have been unable to put forward a valid claim, and it is treated in the financials as other income. Merely stating something as other income is not the end of the responsibility. We need to identify whether this arises out of a bilateral transaction or a unilateral transaction. Disclosure on this could be as simple as stating that the company, the assessee, the partnership firm, the LLP, has decided that creditors of rupees so much is no longer payable. This adequately conveys that this is a unilateral transaction. The company has entered into revised negotiations with suppliers, and as a result of these negotiations, the creditors amounting to so much are considered no longer payable. This conveys that this is a bilateral transaction. The reason why this is important is if it is a unilateral write back of creditors, proportionate input tax credit will need to be reversed. If it is a bilateral transaction, no treatment will be necessary because Section 63 of Indian Contract Act permits revision of the contract post performance before payment. This is a provision that doesn't even exist in the English common law. It exists only in India to really account for the time value of money. If I have to pay you 1 lakh rupees 2 years from now, you may as well accept 80,000 rupees without having to wait for those 2 years. So this is a provision that arises out of the law, and the treatment in GST will be different. Another big area of mischief is discounts. I think we can understand what is discounts far better than most others. So I was on my way to meet a client. This is sort of a secret, but I'm sure we have all suffered this, so I can share this on this occasion. I was on my way to meet a client. There's an enthusiastic accounts person in our office. He immediately brought out that client's ledger account and said, sir, why don't you follow up on payments from this client? Anyway, you're going to meet them. There are some people in office who are responsible for collections, and they invariably know how to pin this responsibility on someone else. Right. Now, those who are joining me in this are the ones who have suffered like this. So I went to this meeting, I told this client, we finished the discussion, I said, by the way, these bills are outstanding, why don't you clear those bills? Because I have a tough time in the office explaining why I haven't collected these bills. So the bills were about, let's say, 6,50,000 rupees. 6,50,000 rupees. All right? It's just an assumption. Why not have that kind of receivable? 6,50,000 rupees. So I went and told him, and he said, sir, we will immediately clear all the bills. I'll just get the bills checked with the accountant and then come back to you. I said, no, wait. Your accountant has checked all the bills. I've got that also here. Balances are all confirmed. So finally he said, all right, sir, I will see if the director is there. I will get the check signed and come back to you. I said, your director is there. You can see his car right there. He's not gone anywhere. So you please go do what you're supposed to do. So he knows now that he can't wriggle out of this awkward situation. So he went and got a check prepared, came back and said, sir, here is this bill, 6 lakh rupees. I said, but the balance is 6,50,000 rupees. You know what it means. Full and final settlement, sir. 6 lakh rupees. So all right, so I came back, I told the accountant, you know what? You forget about the GST opinion I just whipped out there. Nobody cares about it anyway. I've collected 6 lakh rupees and here is the money. So the accountant immediately updated tally. He brought back a revised ledger, 50,000 rupees outstanding. I said, you please go and pass another accounting entry. What is that accounting entry? Cash discount. Cash discount, 50,000 rupees. To save my face in the office, what is actually bad debts? I have called it discount. Discount is a discount only if it is on the invoice in GST. Discount which is not on the invoice must be in an agreement predating the sale but determined subsequent to supply. Section 15(3)(b) lays 3 conditions for post-supply discount to be considered admissible, and I'm telling you, in 9 out of 10 cases, post-supply discounts are not discounts from GST perspective. When an auditor discloses something as a discount, with great trepidation I read those disclosures about the discount, because discount is not an expression to be used lightly, and no one other than the auditor can understand and appreciate the gravity of that expression. For an auditor to entertain an assertion made by the taxpayer that this is discount, it is unbelievable and remarkable that an auditor will let it pass. An auditor is the first person who is supposed to stop, analyze, and establish whether that is really discount or is it bad debts. Because it is very common now to disguise and use expressions based on the consequence each expression is visited with. If you call something discount, the tendency is to think that it will reduce the cost of inventory. If you treat the same transaction as incentive, it does not reduce the carried value of inventory, it goes to appear as a separate transaction of supply. But taxpayers use discounts and incentives as synonymous expressions. Discount, incentive, doesn't matter, all right. CPT, foundation, one and the same basically. All right, but that doesn't work because the consequences of each varies in GST. So the third aspect I want to bring for auditors' consideration is, please be extremely circumspect of the expressions you use. The expressions used to describe any transaction must be filtered with your wisdom and discretion. You cannot say, the company has given discounts/incentives. So basically, you don't know what's going on. All right, in this room we can agree that sometimes these things do happen, and it's after all the same thing. Whether we eat at 11:30 or at 2:30, it is still lunch, isn't it? Please, I want to bring this as a submission because the taxpayer is put in great peril because of the expressions chosen by the auditor. Auditors choose expressions, and when an auditor chooses an expression, the world considers it not to have been chosen ill-advisedly or lightly. An auditor considers with great care each expression because it means something in GST. It means something in GST. Everything that is income, if it was liable to GST, then two papers in CA final could have been merged, isn't it? If every income is liable to tax, then it will be an income tax. It is not a GST. So therefore, we need to identify how did this income arise in order to see whether tax is applicable. Again, we go back to the financials to see how they have been disclosed. When I used to do articles, this was my mistake for no other reason but because of my seniors who were also article clerks. All right. By the time we reached third year, we figured this out, that the second years are the ones who messed up with the first years. By the time we reached third year, we all figured things out. I thought audit was to tally the trial balance, because trial balances would come for audit which were not tallied. And I'm very sorry that this was how the situation was 25 years ago. Now I think that situation doesn't exist, because now the talent to tally trial balance is eroded. That's no longer there. So we thought we'll tally the trial balance. So someone asked me, what were you doing last week? I was doing auditing. So show me what were your audit observation. Here is this tallied trial balance. I have finished the audit. Audit, what is the status of the audit? Complete. So I carried this to the audit partner, and he said, no, accounting is complete. Auditing will start now. All right. The reason why so much emphasis is given to audit is because it is that occasion where the financials are distilled to then disclose to the whole world what this company or this entity has been doing for the last financial year. So therefore, the need for auditors not to entertain the views of the auditee becomes paramount. This is the fourth aspect I want to bring to you. Please don't permit the auditee to furnish information which you are required to accommodate in the financials. Taxpayer, the auditee will only give you information, and it is you who will permit that to find a place in the financials. If you see Caro, all the three divisions, very important, the schedule 3, all the three divisions, the reason why it's placed in 3 divisions is wonderful, because the needs of users of those financials varies. All right. Those who don't need to follow Ind AS, those who need to follow Ind AS, and the rest who, and NBFCs who have their own challenges. We'll take a few moments to touch upon some of those aspects. Unbilled revenue sounds to a taxman as turnover escaping assessment. When it's revenue and your auditor says it is not billed, of course it is turnover escaping assessment. Since you have not billed, you have not paid GST. How many notices we have received because your unbilled revenue means that you haven't discharged GST on those. Unbilled revenue alone is not the challenge. Recently we got a show cause notice in GST. It's so amazing. Recently we got a show cause notice that the audit officer took exception, saying that how come your depreciation is 16 crores? Sir, can you please explain your question once again? Why is your depreciation so high? So we showed that Excel file that has the calculation of depreciation, and the depreciation worked out was 16 crores. He said, too much. Corona. During Corona time, why did you depreciate so much? Obviously you were shut. Your machinery will come down by 10% every year. Exactly 10%. Not a little more, not a little less. Too much. I have reason to believe that this depreciation is liable to GST. Now he's not even at BS Raman level. Now you have to bring him up to Shukla Agrawal. There's a big gap, and you don't have that much time because of the statute of limitation. He's there and you're there. So I said, all right, sir, let's go with this. What do you want to do about this? I want to charge GST. Okay, sir. How much GST? 28%? Saka. Then he said, no, 28 is too much. Let's charge 18%. Got it. What value? Cost plus 10%. That is the trend, isn't it? Let's go with cost plus 10%. 17.6 crores times 18%, we will charge GST. He issued a show cause notice. We replied to the show cause notice, short reply, because over time I have learnt that when the answer is long, it is most likely wrong. Isn't it? Because we tried this in inter and final, it didn't really work. How many took extra answer booklets? Please raise your hand. Everybody. Everybody, because all honest people are in this room. The hope is 1 mark per side. This paper I am through. Rest, the aggregate here accounts, their tax will take care of it. Isn't it? Every group we have one paper to take care of aggregate. We are used, in office I asked someone to write an adjournment letter. We have to file for adjournment. 7 pages. 7 pages. There is a case law in the adjournment request letter. Like, why? No, sir. I have learned. Group 2, CA final, more case laws is the thing. So, keep it short. Keep it short. So, we filed a short reply. Depreciation is too much. You are not happy with depreciation. Cost plus 10%, 18% tax. Please tell me, what is the HSN code you have used? What is the HSN code? 1988 AAR SC 1384 Govind Saran Ganga Saran's judgment. All the taxing ingredients must be brought to bear in the notice. What is the HSN code? He hasn't included an HSN code, so I don't know whether it's goods or services. If I don't know if it's goods or services, I don't know anything else to answer from there onwards. And finally, the demand was dropped because they knew that the notice was defective. So it's important for us to identify there's going to be a huge gap in understanding. So therefore, auditors are very skilled in making very concise disclosures of something very complicated. A very concise disclosure. About Ind AS, I'll give you a small instance. 116, we'll take the last Ind AS. On leases, the lessor will capitalize the asset at historical cost. Lessor will capitalize the asset at historical cost. The lessee also will capitalize at NPV of future cash payments. Now both have the same asset in the balance sheet. Is this going to create confusion or not? Of course it's going to create confusion. The same asset. It is in the balance sheet of both parties. Isn't this suspicious for a taxman? Of course it is. Disclosure, disclosure, disclosure. It's important to disclose how these transactions have been dealt with. Someone constructed a highway, spent about 400 crores. So the project to construct a highway, this very large project was awarded. They spent 2-3 years constructing this highway, and after constructing this highway, they were permitted to collect toll. They were permitted to collect toll. When you look at the transaction, they have purchased cement, steel, sand, all the inputs that are necessary for a works contract find a place in their CWIP account. So the tendency for everyone to think that this is a contractor. This company is a contractor, so therefore we'll have to look at all the clauses, the HSN code, the exemptions applicable to a contractor. But actually, if you see, a company who constructs this asset, they will amortize this over the annuity period, the toll tenure, the years for which they are permitted to collect toll, they will amortize this. Ind AS 40 deals with investment property, where this is not going to be treated as property, plant, equipment. 16, to be depreciated, but it will be amortized. Now, if you see the toll curve, it's not a linear curve, so amortization will not be linear. Now, when someone takes objection to depreciation being too high, how do you explain amortization, and amortization that is not linear? Why is it not 10% every year? How do you answer those things? Therefore, we have to go to the auditor to find out what auditor feels we need to understand, what auditor believes users of these financials need to be educated about. If the auditor were to classify this assessee not as a contractor, but someone who has an investment asset, and that he is entitled to this concession to collect toll being based on a non-linear fashion, amortization also follows that path, that will help address the treatment that is to be given in GST for these transactions. These are just some of those instances where we will need to touch upon some aspects. We'll talk about very briefly lending, financial lending transactions, because Bangalore somehow has a lot of entities who call themselves fintech companies. RBI is very clear in stating that the borrower only must pay interest. But GST is indifferent. GST says consideration can be paid by the recipient or by any other person. And that is true even in Contract Act in section 2D. It says, where at the desire of the promisor, the promisee or any other person does or agrees to do. So a stranger to a contract may not be permitted to sue upon the contract. Right? Tweedle versus Atkinson, remember that? But a stranger to a contract can contribute consideration. Reserve Bank says, no, if the borrower does not pay, then the payment is not interest, it's something else. Only if the payment is interest will GST give exemption. If the payment is anything but interest, GST cannot extend that same exemption. The reason why this is important is to bring you to another aspect to consider. As auditors, we have all learnt to look at the substance of the transaction and ignore the form of the transaction. The substance prevails over the form. Look, basically what you are trying to do is look attentive while waiting for lunch. Substance of the transaction. The form of the transaction is for me to keep you engaged so that the thoughts about a wonderful lunch are not for long spans of time, but very intermittently it comes and goes, all right? Taxation, however, leans heavily on the form of the transaction. Taxation looks at the form of the transaction because in 1960 AR SC 200 in Motor and General Stores, Supreme Court said unless the contract is dismissed as being a sham, no court, no less than a court, no court can deviate from the contract. A court must implement the terms agreed between the parties in the contract presented to it. So therefore, a court or obviously a tax officer cannot rewrite the contract. They only are supposed to read the contract. So here is this balancing act that is required. In the financials, the substance of the transaction needs to be given treatment. In taxation, the form of the transaction is going to be given the treatment. This balancing act can be played by no one but auditors. We had one instance where a listed company, a Bangalore-based listed company's VAT assessments were taken up. For some past years, VAT assessments were taken up with great hurry. They had paid about 92 crores of tax. They had paid a little bit of excess tax, about 10 lakhs of tax extra. So they filed their returns and they claimed refund. Any refund claim was a criteria for selection for detailed scrutiny. So they took it up for reassessment. They took it up for reassessment and said, look, your books of accounts are not reliable. This is a listed company, financials are audited, all stakeholders have accepted the financials except this deputy commissioner in Yeshwanthpur. He says, I think your financials are suspect. I'm not happy. So what do you suggest, sir? Here's what I'm going to do. Forget your sales. I will tell you what your sales are supposed to be. Purchases plus 35% margin is sales. Purchases plus 35% margin, he only invented. The whole country apparently is growing at 4.5%. Only this assessee is growing at 35%. Anyway, 35% over cost was the revenue that he's arrived at. Some input tax deduction. The liability now arrived at 10 lakhs refund now changes to 15 crores demand. Officer now satisfied. Here is the order. Now you please see whatever you want to do in appeal. The first step is to dismiss the financials as not reliable. When financials are dismissed, it's a very big question mark. Taxpayer often tends to get into the merits of the notice or the order in this case, than go back and say why financials have not been regarded. GST has brought so much of constraints that tax officer cannot disregard financials lightly. To disregard financials is to cast aspersions on that entire exercise that was carried out, and all stakeholders who have accepted these financials are now to reconsider what they have done. So look at it from this point of view. Reliance placed on financials should be inspiring, because taxpayers' financials should provide so much information that with clarity users can get the information they require. Schedule 3 also moved from assets and liabilities to current and non-current style of disclosure with great insight, I would think, because anything that is non-current needs to be identified and called out separately, and this has a direct bearing on how tax audit disclosure is made in respect of these financials. When you speak about tax audit, everyone's attention is drawn to clause 44. There are there's a tabulation to make disclosure of how these expenditure have to be classified. You know, I acknowledge the presence of a lot of senior chartered accountants who are specialists in tax, in income tax. This is more a question that I have for you to please consider than an answer that I am offering. Clause 44 talks about categorization of expenditure. But I want to begin by asking, how did you consider something to be an expenditure? An expenditure inherently presupposes reciprocity between two parties. When you say something is an expenditure, obviously you don't mean it is a mere outlay. You don't mean it's an outlay. When you say something is an expenditure, you are making a positive assertion. You are making a positive assertion that this is an expenditure that matches with the income that is reported. Again, that goes back to our matching concept. When you say something is an expenditure, therein lies an assertion by the auditor. Whether that expenditure is column 3, 4, 5 or 7, it doesn't matter. Expenditure is not the sum total of your debit side that you are reclassifying it in a particular manner. When you call something an expenditure and you are attesting that statement, you are also agreeing with this tax position that that outlay is an expenditure under 28 to 44D. It has to be matched with the revenue for that particular financial year. My question is, are you satisfied that that outlay is an expenditure? Do you have reason to believe that there is an outlay that has not yielded any positive revenue for that taxpayer? We'll take two instances. There is a company who's involving themselves in oil exploration. There are 5 blocks that have been allotted. They have to start prospecting in those 5 blocks. They'll prospect in those 5 blocks, identify 3 viable blocks, do test exploration in 3 of those, arrive at the potential yield in those 3 blocks, finally identify 2 blocks as suitable for full-scale exploration. But they have incurred cost on the entire 5 blocks. All the preliminary expenses have been incurred before they could identify which 2 blocks are suited for full-scale exploration. My question is, expenditure incurred on those 2 blocks yield revenue, admitted. But expenditure incurred on the other 3 blocks, is it expenditure that satisfies matching concept? Or is that expenditure necessary to be disclosed in a different manner in the financials? We'll keep this example aside. We'll take another example. There is a real estate developer who has identified 2 projects, one in Belgaum, one in Bangalore. He spends 100 crores in preliminary expenses, non-refundable deposit, feasibility study, title clearance, very large land parcels in Belgaum and Bangalore. He's incurred 200 crores of cost. After 200 crores later, he comes to the conclusion that the Bangalore project is a dud. It cannot continue further. Belgaum project is launched and it is successful, it earns revenue. Expenditure incurred in the Belgaum project is matched with the revenue from the sales in Belgaum. My question is, how can expenses of the Bangalore project be considered admissible against revenues of the Belgaum project? Now therefore, who else but the auditor should examine and come to a conclusion whether all the outlay incurred by a assessee can be classified as expenditure? That's my first area of concern. And this is not a secret that only we need to discuss. This information is out there. Both sides understand this question. It's just that revenue is not in a position to deal with unfructified expenses, abandoned projects, aborted costs incurred that did not yield any results. How they can go about raising questions about admissibility of input tax credit. Input tax credit in GST is not limited to the heads of expenditure and to see whether it is blocked credits or ineligible by other provisions of the law. But right at the very beginning, whether this is an expenditure or a mere outlay needs auditors' inputs, auditors' consideration. Auditors need to make a statement whether they believe something like this needs a separate treatment. This brings us to the question, how do we classify under clause 44 various expenditure? I'll bring 3 points for your consideration regarding clause 44. As we do more tax audits, we'll get clearer and clearer, I suppose, as far as what needs to be done in clause 44. I'll bring 3 points for your consideration. First, every inward supply must become an outward supply. Every inward supply must become an outward supply, directly or indirectly. When you identify something as an expenditure, you also owe this duty to answer when something appears as an expenditure, what is the outward supply out of that? There is a furniture manufacturer who has purchased gold coins. There is a furniture manufacturer who has purchased gold coins. Every inward supply should either be in inventory or should be used in an outward supply. What is the need for gold coins if you are manufacturing furniture? Obviously, you are not going to stuff gold coins inside the cushion, hoping some lucky customer is going to find it, isn't it? That's not the idea. Obviously, this is to incentivize marketing executives, some key customers, distributors, and so on. So the question for auditors to consider is, if there is an expenditure of this kind, what became of these gold coins? It's not in stock. It should be in an outward supply. Where is the outward supply? There was a real estate developer who approached with a question saying that in North Bangalore, we are launching a new apartment project. What's new? There are so many projects in North Bangalore. So he said, we are launching a new apartment project in North Bangalore. So the first 2 customers who come in and make 100% payment will be given a Hyundai car. They'll give them a car as a gift. They'll give them a car as a gift. So the question he had was whether we can claim input tax credit on this car. He's aware that input tax credit on motor vehicles is not allowed if you use it for yourself, but if you give it away for a further supply, then you are eligible for input tax credit. So the question that started off whether you're giving it to your customers or not, it turned out that because they were giving out the cars to their customers, they were entitled to input tax credit. But the byproduct of that decision was that the apartment will now be taxable at 28% because it becomes a mixed supply. You're giving an apartment and a car. All right? There are severe consequences of how taxpayers treat something as a gift. Who better than the auditor to explain whether something is really a gift? If you see section 122 of Transfer of Property Act, gift is an unenforceable contract. For the reason there is no reciprocity in a gift. You don't get something in return when you give a gift. When a taxpayer claims something to be given as a gift, it must be admissible under chapter 6A, not in section 37. So when you don't claim this as a deduction under chapter 6A, but you claim this as an expenditure under section 37, obviously it's not a gift. And when there is no gift, it has to be an outward supply. Who else but the auditor to examine these schemes and arrangements that the company has to make disclosure about this treatment? Once you have ironed out the treatment of all inward supplies, which ones are merely a unilateral transaction? When it is a unilateral transaction, you will not have any classification of registered person, unregistered person, composition taxpayer, etc. It is a unilateral transaction. First thing to consider, unilateral or bilateral. Second thing to consider is there an outward supply that has been omitted to be disclosed? That becomes important. The third aspect is to then classify based on the format required in clause 44. Please bear in mind, clause 44 very innocuously lays down 7 columns in which information needs to be provided. Auditors have great concern as to how to secure this information. It is certainly a matter of concern. Greater attention will be paid in the initial years to the disclaimers and the qualifications relating to clause 44 than what is disclosed in clause 44, isn't it? During the time when GST audit required compulsory certification by a chartered accountant, there was a lot of conferences and discussions. But once this compulsory certification went away, conferences also on these topics vanished from various conference agenda. There was discussion among chartered accountants saying, how do you reconcile the financials with returns filed by the taxpayer? How do you reconcile them? Tax officers always used to wonder, I don't know how chartered accountants are able to do this reconciliation. They must be really brilliant that people will come in with financials, with GST returns, they will just leave it with them and go away. A few weeks later and the reconciliation is ready, everything is matched. And we all know everything is sitting in 5.0, isn't it? Everything is sitting in 5.0. So we know how to reconcile two things. In fact, in Chartered Accountants Conference, the bigger concern was not when the two things were not tallying. When the two things are not tallying, we know how to do the reconciliation. But the anxiety would be when the two things were tallying. Now what do you do? If they are not tallying, you know how to find the difference, you'll know how to do the reconciliation, you will give some reconciliation and hopefully satisfy someone. But when the two things are not, there's no mismatch, everything is matching, financials and annual returns are matching, what do you do? So then when the senior chartered accountant stood up and offered this explanation, he said, first, I will make them have a mismatch, and then I will do the reconciliation. Providing reconciliation is a big ask. Clause 44 extends not just to that legal entity. Please bear in mind, when you fill clause 44, it's not about filling clause 44 only in respect of the legal entity. It has to arise from a subschedule or a grouping comprising of multiple taxpayers under that legal entity. Every registration holder will have a clause 44. So the clause 44 that appears in the entity's financials should be an aggregation. When we used to do the reconciliation for 9C, the taxpayer was required to provide information relating to the turnover of all registered persons across the country. We may not be the statutory auditor, we may not be the statutory auditors, we may only be doing the tax audit, we may not be the ones doing the GST audit, somebody else may be engaged to do the GST audit of the Delhi branch. Please compile all that information. Clause 44 is not an aggregation of all distinct persons, it has to flow from a subschedule that is prepared for each distinct person. Obviously, the burden falls on the auditors, but the concern is not that the auditor needs to prepare this. Auditor need not prepare this. I think it's the taxpayer. 25 years ago, we were sitting and tallying trial balance. Today, we don't even have the talent to tally trial balance. If we don't have a trial balance that tallies, we'll resign as auditors. We got that solution going. So therefore, please bear in mind, taxpayers need education. Taxpayers need education to prepare information commensurate with the responsibility that resides in clause 44. So the question that arises is, Jatin, if you say all of these things, I won't have clients anymore. I have clients, I have to look after their interests. But here I have a suggestion to offer from the limited years of experience. This one thing I have learned, that taxpayers as clients are not loyal to us. If we think that taxpayers have been loyal to us because they have been with us for 10 years, 20 years, maybe 2-3 generations, I think one of the two is already unhappy with the relationship. You are unhappy because he treats you like you're his son, because he was your father's client. All right? He'll simply come into the office and order things around, and he will not bother that you have other appointments to keep. Or he has grown and perhaps we have not kept up pace with the requirements of that client. A taxpayer is not loyal to his chartered accountant. A taxpayer looks at chartered accountant as a service provider. Many years ago, when I received a vendor empanelment form, we were the tax consultants and we received one form from that company. It says vendor empanelment form. That's when the reality hit, that we are also a fit within the list of vendors. We need to fill the empanelment form. We have to give our PAN number. We have to give some details. That's how our bills will get paid. That's how our bills will get paid. Otherwise, we'll keep providing services, but bills don't get paid. So therefore, we had to suffer this ignominy. When you look at this aspect, I think GST has brought this to the fore, that we used to spend great amount of time trying to be loyal to our clients, interpreting the law to suit their interests best, even if it doesn't make sense. We're trying to read this law, but we want to come to the answer that it is not taxable. So the client called and said, sir, on this residential house property, after this GST council meeting, should I pay RCM or should I not pay RCM? So his chartered accountant said, don't pay tax, sir. Why should I not pay tax? I don't know, sir, you don't pay tax. I'm attending the seminar now. After the seminar, I will tell you why you should not pay tax. But you please proceed, don't pay tax. Somehow we felt our loyalties were with our clients. Next, I've known a lot of tax officers who befriend chartered accountants. Chartered accountants have officers' mobile numbers. As soon as they call, it's already stored, and you know which officer is calling you. When you call, the officer does not say hello, he says hello Mr. Jatin. So he knows he saved your number, you saved his number, so you think you have a wonderful friendship going. I would call this friendship an unholy association, because we are both friendly with each other, waiting for the right time when we can take advantage of this friendship. Either I will tell him to sanction that refund even if it is not eligible, or he will tell me to ask my client to pay the tax because he has revenue targets to meet. Please bear in mind, we don't owe this sort of a loyalty to either sides, neither to the taxpayer nor to the tax officer. Our loyalty should be to the law and our craft. Our loyalty should be to the law and our craft. If we are good at what we are required by the law to do, clients will find their way to our offices, get their services provided by us, pay fees that we believe is reasonable, and the work will get done. Audit is somehow not being considered by young chartered accountants as a interesting area. I see a lot of people coming in to say that during articleship itself they want to specialize. During articleship they want to specialize. I feel greatly anxious when someone who's finished foundation says, I want to do indirect taxes, I want to do company law, I want to do income tax. I feel audit is that one place where no matter what you want to do, you should do audit, because when you join chartered accountancy course, you are going to become an auditor. You don't join medical school expecting to become a real estate developer. You join medical school, you will become a doctor. Then you can do real estate business. But when you join this course, you have to become. So from that point of view, I've even very closely watched chartered accountants who have qualified doing articleship in a specialized area. I find their skills greatly wanting. Because they think that it's cool not to know double entry. It's cool not to know double entry. So what's the entry for reserve for bad and doubtful debts? Oh, adu gottilla. I don't know that. All right? I'm an expert in GST, central excise, service tax, income tax, transfer pricing, double tax avoidance agreement. Don't know double entry. All right? I think if our foundation, the reason why accounting and audit is so fundamental is because it will spread in every area. Audit is not for the weak-hearted. Audit is for those who have the stomach to digest the requirements of all the laws that has a bearing on the business and bring their services to bear in that report that they send. Auditors' reports are accepted with unquestioned subordination. I've seen reports signed by the greats of our profession that have been entertained by high courts without any question or qualification. So there is a need for this area to be filled with younger people getting in to know that they are a specialist in GST when they do audit. They are a specialist in taxation when they do audit. They are a specialist in Companies Act when they do audit. Audit is what we all are. We don't get recognized as anything but as accountants, and as accountants we go on to do different areas of work. If I do GST, it's not because I have some extra capability. I have some deficiencies that I'm not able to do all of those things. So therefore, I have chosen to do one thing out of the several that auditors need to do. I believe this is one place where auditors have a significant contribution to make, and GST is not going to be overwhelming because auditors have the capacity to accept what GST has to throw at them, digest it, and turn in reports that the whole world is going to accept. I thank Bangalore branch for giving me this opportunity and all members for your participation. Thank you very much.
The forum is open now for questions. If any one of you have any questions, you may please ask.
Jatin, assessment year 17-18, partly service tax, partly GST. Whether the notice can be given now? And if the limit of service tax 10 lakhs, GST 20 lakhs, whether he can mix up and say the 10 lakhs is for the portion of that and 20 lakh for this?
For the first 3 months of 17-18, the period of limitation will end on 31st August 22, and 10 lakhs limit is available for service tax, 20 lakhs limit in GST will still be available.
10 lakhs and 20 lakhs?
Yes, sir. It will still be available. The limitation will run out 31st of August. All right.
Okay.
Thank you very much.
Vajradapi kathorani mruduni kusumadapi. Jatin so clearly illustrated it by talking harsh truths about GST, about us, about students, about we not considering audit as our primary thing to do, and softly gave us simple solutions which can get us out of it. And thank you for enlightening us on giving stupid answers to the lame questions and how much of implicit faith is there on auditors and how are we supposed to keep up to it. A heartfelt thanks to you, sir. Now I request
CA Amog S. Dharwadkar, Chairman of Kalburgi branch of SIRC of ICI, to present a memento as a token of appreciation to our beloved speaker, and also present him with vote of thanks.
I thank the speaker of the technical session, CA Jatin Christopher, for clearly saying that disclosure is the key. Disclaimer may be a solution, but disclosure is the key for all the audit reports coming up for this year. I thank you, sir. Thank you for a very excellent presentation. And I thank the chairman of Bangalore branch for giving me an opportunity to chair this technical session. Thank you very much, Srinivas. I thank all the delegates. I think it's a full house for the patient hearing. Thank you very much. Now we'll present a memento to felicitate the speaker of the technical session.
a huge round of applause to our CA Jatin Christopher, sir.